Okay, so I guess this is going to begin the vlog for Type B trading, non-aggressive day trading, and I actually had an earlier pre-market open session. Apparently I closed my Camtasia and just clicked through whatever warning it sent up to, as far as saving what I'd done. So it's gone. So this is it. All right, it's Friday, July 6th, 2018, and this week just needs to go away. So what we've got, let me throw this up there. So it's about noon, and it was a down day again, 190-ish. There were 5 trades. 3 actually went my way, and the problem was they just didn't go my way enough. It was the first 2 trades of the day I made that really sunk me back when there was volume, and I'm going to kind of go through those. So let me get rid of this. And as far as the watch list, so this morning I had recorded and I wanted to show you I had no stocks at all on my pre-market scanner. None. Never happened. So this was just shaping up to be a miserable day. Okay, so let's take this over here and we're going to start. So what I did, I looked at news-driven stocks and I waited till after the open, looked at the relative volume, and kind of winnowed through which of those stocks I would actually trade. And I came up with Celgene as one. And, at the open, it had actually gapped up a little bit. And just kind of, it gapped up. So this could easily have been on my gap watch list. It just didn't have the volume during the pre-market. Nothing had the volume during the pre-market. This day is, if anything, probably the worst of this week. All right, so on open, it started setting up into this ascending wedge. So I waited for my confirmation at 1, 2, and this was my third. I went ahead and sold short, and it went completely the opposite direction, so I got stopped out. All right, that happens. So at a similar time frame, Micron, our old, I don't know if I want to call him friend, he's a nemesis today. Micron starts doing the same damn thing, giving me an ascending wedge. And as it peters out into the pinch, I mean it's an ascending wedge. You play this to the short side. So I had sold at my confirmation 1, and then this was kind of 2 somewhere in here. So this would be 3. It was a little bit of a mess. It's on it's not on the shortest of scales, but it's not on a real big scale. And then it just broke north instead of south, and I got stopped out again. So I had 2 ascending wedges in the open that just completely went out of pattern. So, we're humans. We like to make unfounded assumptions. Does that mean that when there is low volume of whatever categories are low volume today, retail investors, whatever, retail traders, that our patterns are less accurate? No, it could just mean that these patterns, one and then the second, went against me, because they do go against you. It just could be roll the dice. If you see this often enough at certain times, you might make a correlation, but we don't want to make an uncorrelated assumption. However, it is a fairly commonly held understanding that without traders trading, it's hard to trade. I might go out on a limb and say that does sound like it makes sense. And okay, so clearly that could have had an influence on what happened today. All right, you notice with Micron, and I don't know if this was my second trade chronologically or not, but we'll just roll into it. We started setting up a big symmetrical triangle. So a symmetrical triangle is a red-black play. This could go either way. But I'm looking at this. Generally, when you zoom back, when you look at the last few days, after recovering from that event on Tuesday where Micron just dropped uh, it has been kind of trending to the up, and certainly the momentum here seemed to be to the up. So I decided I would set this to the up. So I waited for my confirmation. I had 1, 2, and then 3. And actually my lines drawn a little bit differently. So when I entered into this, it was challenging the support, and I entered, and then it actually dropped below the line I had drawn. So I got a little bit antsy about this trade. My line was really more like this. So when it didn't get anywhere near my stop, which would have been down around here. As soon as it gets lower than this low. And when it came up and was challenging the line, it gave me an opportunity to say, well, I really don't feel good about how low this went. And also, we've got still a pretty good range going here. Although, if you take it to take it out, really the range is not that big. But I went ahead and got an opportunity to get myself out with a small profit up here, and I was expecting, okay, if this is what I think it is, it'll come down. Symmetrical triangles tend to, especially when there's a volume issue, which Micron's got decent volume. It's, again, one of the few stocks that do. They usually tend to peter all the way down into the point. And I like to, if it's a red-black, so I like to make my play in the point, because your stop loss can be really, really tight. When it breaks, it tends to shoot one direction or the other. So I was perfectly okay letting this come back down, challenge the support line again, go back up, whatever. Maybe I would have played that again, a very small gap. Maybe I would have just let it peter into the point. Didn't get the chance. It did do the break, but as you can see, we would have expected something on the order of this for range. At least this, which is 97 and 60. This is 30 cents. We didn't get 30 cents. So, now it's doing something funky. This just isn't, I want to make that uncorrelated assumption and say the patterns aren't acting like patterns. All right, neither here nor there. So let's go to, we did Celgene. Let's go to Marvel. So, Marvel, I feel like there was another Celgene, though. And there was another Celgene. Okay. So with Celgene, if you remember, that was that first play where, did the ascending wedge and it went the wrong way. We started kind of shaping up into a descending channel, and I never got any. I drew my lines, but never got any third confirmation. Of course, I would have played this long. It kind of petered around and then did something of a confirmation. And this is a pattern that is under influence from forces that are, more amplified due to the trading conditions than they normally would be, kind of stretching it out like taffy. And it did finally do that upside break, but it's way over here. It's just way out of pattern. So the upside break then starts making a pretty decent bull triangle. Well, I love bull triangles. This allows me to have a very tight stop loss. I can enter here and have a stop loss here. So that's what I did. I went in, I had my 3 confirmation, 1, 2, and then on the third, I went ahead and I went long, came up here, sold half my stake here, and this was a day I've already seen patterns just not doing what they're supposed to do. So when this starts dropping back, I got out the rest of the way. So that actually came back to literally to about here before I got out. So I didn't make much on this one either. Okay. And it's just kind of doing something funky now. It never gave it. You get this beautiful pattern. Even here on this stretched out taffy pattern, we got a bump. This beautiful pattern and no bump. To me, that, okay, uncorrelated assumption, but to me, that is the ratio of traders is off due to the holiday. What we normally have for the different categories of traders is clearly skewed. Okay, in my mind, clearly skewed. Again, I'm making an unfounded assumption. All right, so now we'll go to Marvel. This is the last trade of the day. well, it may not have been the last chronologically, but it was the last trade of the day. So what we've got here is from the opening Marvel, which has got a volume issue, and this is not Marvel like Avengers Marvel. This is Marvel Tech, not Marvel Tech. It is forming an ascending wedge, channel, an ascending pattern that gives it some regularity, and we expect this eventually to break to the down. So once I had my confirmation, and I'm counting the open as confirmation for point. So there's 1, 2, and 3. I went ahead and, oh wait, no, I'm saying it wrong, aren't I? I am saying it wrong. I actually played this short. Well, of course I did. It's an ascending wedge. It's going to break to the down. Sorry, folks. Brain fart. Turned 45 a few days ago. So yes, it's an ascending wedge. So 1, 2, 3, and then I shorted the stock here. And it did just what it should do. It came on down. I did a little bit of profit taking here. And then came on down again. Broke under my line, which was kind of, we're sort of out of pattern now. I mean, I could draw the line, but it gets funky I guess if it's a channel. So I went ahead, got out a little more. I had 800 shares, so at this point now I'm 400. And actually at one point I bought in. It came back up, and I bought in another 200. Why? Well, again, if you decrease your risk, you can increase your profit potential. So if you see this blue line, I had pulled my stop loss way, way down. So I bought in another 200 shares. I'd already banked profit. It wasn't going to change that. And what happens is it did come up, and I got stopped out the rest of the way. So, and now it's just going sideways, doing its own thing. Volume wasn't there by the end. And, blame whatever you want. So that was the day. And as far as my trading performance, better day today than yesterday. Now, maybe a little bit of over trading. 5 trades is a little much for me. Jumping into that Celgene and that Micron as quick as I did, that might have been a little bit of FOMO, if I'm being honest with myself. But on the other hand, of those 2 trades, you would have expected one of them to go the way that it should. So just a weird day and the end of a weird week. And again, next week can't come soon enough. And honestly, the end of August can't come soon enough at this point. I'm in East Tennessee, and it's sticky hot out there. So, and I'm originally from Alaska. So in any way that matters to me, the end of August can't come soon enough. But at least next week, hopefully the traders are off the Jersey Shore, wherever the heck they are, and back in their offices. So until then, everyone, see you later.